crypto market and its confusing nature is still in front of you. But if you do break those barriers and look through what exactly has happened in the recent past, you're watching this price structure playing out in Bitcoin. So, what are the possibilities of this playing out? Because it's not just a micro chart and the price structure, it should also be a medium term, a long term structure. So here your trend line support comes close to 68,800, and that's still a short term thought process. If you are looking for a support range in Bitcoin on a long term horizon, then at that point your argument becomes a little bit different because you are looking through this level. Now remember, that's valid all the way from September, October 2023. So you're talking about major bounce off from that trend line each and every time you reach there. So are we going to retest that range? And if we do, what would be the level which you will see in Bitcoin? At the same time, in the market, you're watching Ether breaking below the moving average, testing the moving average and slowing down. Is that a retest and a rejection? If that's so, this is the exact opposite. So Ether shows you it is playing out such a scenario while you are still on the trend, the range to the upside. So the market is confusing. But these kind of things in front of you just shows you why it is so. The SEC just added Ether ETF filing by ProShares to its website. So one by one, you're watching how things are evolving. And you're watching, big accounts adding on call options and preparing to buy in futures for long. So I'm like, okay, that kind of gives the idea that some of them who we have seen over a long period of time that, yeah, the accuracy level is good, calls on bullish territory. But what exactly are you looking at for the next few weeks? Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Right now, when you do look at these, and if you have a question of, okay, what does that actually mean? You need to look through a lot of different things, especially when we are looking at XRP. They're like, okay, the price hasn't moved. I mean, look at this price range of 0.5. It's kind of active from May 2022. So we haven't moved up or down. So we didn't lose money, we didn't gain money. That's where people start asking about the supply. Now this is Tesla, which is not adjusted for the stock splits and all. Remember, the top here was like $1,400. Right now, the price stays below 200. So if you go to the charts and pick up Tesla right now, the question I'm asking you is that, yes, the supply matters a lot because supply and demand is what puts the price. So right now, it's at 173. But the moment you actually zoom a little bit out, you don't see 1,400. You see 400. So that's the sharp drop due to this split. Now, it's not adjusted on the split, but you can still see what the market did just after that. So when the price was here, they decided they are going to increase the shares, the number of shares, because it was getting over into thousands of dollars, and which doesn't look good for new buyers to enter. It's like Bitcoin. You think, it's already at 70,000. It's not 1,000 anymore. It's not 10,000 anymore, right? So that's one of the possibility there. And keep this in mind. When you're looking at coins, some of them say XRP, it's 100 billion. Yeah, the total, but not the circulating supply, because the price is based on the demand and the circulating supply, not what you don't have in the market. So when you come down, yeah, these are all in trillions, Then you come down, you see hundreds of billions. and you come back down just below 100 billion, and you go down and you're like, okay, XRP is here at 55 billion. You have CA above that, which perform well. You have Turbo at 63 billion. Now go look at the Turbo chart and put the argument of price is now going to go up because of that amount of supply. Now look at XRP, look at RSR, Beam, Jasmine, see, it's close enough, right? 50 billion almost here and there. And the price is still going up. So you pick which asset you want, maybe Jasmine, maybe Turbo, whichever you like. But then you come in to the macro charts of the same. You want to actually see, okay, what the hell is really happening there, right? It's breaking higher, it's moving higher, it's trending higher. So doesn't the supply mechanics play out here in this particular asset? So when you actually put the argument of, yeah, the supply is too much, you need to understand there are other assets in the same market with higher or close enough supply, which is actually ripping 10-15x already in this cycle. And it looks like it's just starting, right? So the 1, the 2, the 3, the micro, the wave 1 of macro has been completed here. Now, anything like this would be the best one. So you start the next 1, 2, 3, which goes up. But you get the point here. It's up 15x. So the general market, if it is showing it is going to the upside and you decide you're not doing that, then it's completely up to you, because you have to think about this. If the market actually pops, then the conservative, the super conservative argument is like, okay, you're going to go back up at this range, you're going to get rejected, not $20 trillion, not $10 trillion, just below that, 8 trillion, 9 trillion, most likely that's where we're going. But when we say that you're looking at 8 to 10 trillion dollars, remember, the market cap is a summation of the total circulating supply, which is not in the market actually. Say your XRP is not in the market, my XRP is not in the market. Every one of us most likely is in Ledger, Elipal, Trezor, whichever you like, but it's all out of the circulating supply. So you don't need that amount of demand to push the price up. But what matters for you, me, and anyone involved with XRP right now is what's the market thinking about this asset? It doesn't matter what I think I believe in, because the market can stay rational longer than I can stay liquid. If you understand that now, it's better. If you don't, in near future, you'll understand that. Now, if you actually take the same XRP on a pattern side of things, on a trend side of things, you'll actually understand, okay, this is a key range you're in. This is the key support. So XRP chart on a macro shows you this clearly. But the moment you actually put that onto Ranko back, you wait till this goes parabolic. You wait till that shows you it's starting to trend back up. Because if not, you're trying to buy in to a trend which is to the downside. Yes, there are unlucky scenarios. You see a green, you enter, it goes back down. Okay, you at least tried to make the timing better. But if it's going down and you're buying, you don't have that excuse on your side, right? That is exactly where you come with for Bitcoin. So when the daily, the 3-day, weekly, everything is showing you you're going to the upside, if you are someone with decent amount of patience, okay, you know the market is trending higher. Now you take the same argument for Ether. Price action is still going up. The trend is expanding to the upside. Now, what are you actually watching in the market? Because this is important. Because on a 3-day chart, it shows you the MACD cross back to the upside, remains in the positive territory on a weekly. That's important. Now you're looking at, okay, did we get a follow through once we broke this range? Now, which range? This range on Ether, which is the support range around 3740, ranged in that segment for like say a few days to few weeks. So we saw the price remaining there from 21st May all the way up to 8th June. Now we broke that level. So on a smaller horizon, say a 4-hour chart, it shows around 3717. So Ether dropping below that on a micro level actually suggests, okay, you should see some downside. Then you go on a 3-day chart. How many of you remember the thought process we shared here on a 3-day chart for Ether, saying, okay, this is a hanging man, that doesn't look good. This is a hammer, that doesn't look good. Then again, you got a hanging man. So multiple times the price action showed you, at least for the short-term scenario, there should be a corrective leg down. Now say you don't trust the price action. You're more into the patterns. At that point, on a 3-day chart of Ether, this is what you're looking at. You're putting in the argument that, okay, this breakout to the upside is good. I want to see what the volume level would look like when you come to retest that before you bounce off. In any scenario, any given point, 3,400, 3,350, 3,300, that range is going to be what attracts you. Because on a weekly, the price is still ranging to the upside. And after such a big bounce, historically speaking, you come back down and bounce off. That's not something new. You come back down, you bounce back. It's not something new. We have seen that over and over again throughout the history. But right now, on a weekly, what's different? It's showing you you're not getting massive downside. So if you actually pull up the history, you want to actually looking through what these candles actually means, you can actually pull in the candlestick patterns methods. You see this? You have a break to the upside followed by 3 candles to the downside and then a continuation back to the upside. So you can pick from stock market, you can pick from Forex, whichever area you like, but you understand this is the basics there. 1 candle to the upside and it takes 2 or 3 candles to the downside. If it's rising 3, it looks like this. If it's rising 2, it's a little bit different. But the idea is basic. You have a lot of selling momentum trying to raise just 1 bullish candle. And here we are, 1 week of bullishness, and you now have almost 2 weeks completed and the 3rd running, which is still trying to push at least to the 50% range of this candle. So Ether remains bullish on a weekly, and that's heavily bullish because when you look at the range, you're like, okay, the price really has to go way below this and play out the range to this, at least to start slowing down a bit. But if you do look at which direction the Heikin Ashi is going on, you're like, okay, fine, we're slowing down a bit. So a week or 2 like this won't be a bad option. Now, this is where you should look at Bitcoin and the assets which are inversely correlated. So say, for example, in the duration of this phase, April 1st to this range of say May, which asset went up when Bitcoin was going down? Like we entered one trade based on that weekly hedge on that asset to see how it actually responds. It's actually okay, it's doing fine. When others are dropping, this is not, and it's slowly trying to grind higher. So when Bitcoin slows down to test that support, you will watch those hedge assets bouncing up. So those who were in the Telegram alerts in the Scientific Investor family here has already seen which trade I entered because I shared the screenshot, so you guys get to see that. Now, if you want to take benefit of that and get all these charts updates which are being posted on a regular basis, use the link in the description below because this is where the golden pot of opportunity is in the market. If you miss this, the next one, who knows when it's coming? Because all that you have to look at is the monthly chart to see exactly when is that time where you should enter. And history shows you this is that range. That's where the maximum ROI is made in the minimum time. Otherwise, yes, it's true, it was a good range. You bounced from 5,000 to 11,000 in this Bitcoin chart in that phase. But because the RSI was not 70 plus on the monthly, it didn't get enough momentum. Now we are there. What the hell is going to happen? I don't know. But whatever comes in front of my eyes, I've already posted in the SI family. So guys, if you actually received value for your time here, smash that like button for me. I appreciate that a lot. Now, before I wrap up, just one word. The market does show you a lot of different signals. Especially you need to think about this. When the macro market goes into fear, that's where you buy. Now, that buy should not coincide with a negative divergence. That's the only time when you see the price starting to drop, you should not get involved. This is my opinion. Maybe I'm completely wrong. But the history shows you this clearly in almost 99% of the assets when you do in crypto market. When you do get a negative divergence expanding, that's not where you want to get involved to the upside. If you want to short, okay, a small portion of your profits, you can use that. Otherwise, at that time, you stay out of the market. So for those kind of calls, which are crucial in this bull market, be in the SI family and enjoy the benefits. So guys, I'll meet you on the next video. Bye for now.